rightly. Okay, so let us begin. November 2019, question 3. Yes, that is it. BICS Limited. November 2019, question 3, BICS Limited. Yes, someone should read the footnote for me. And then let's.
All right, BICS Limited. So the requirements is the state prepare for BICS Limited a statement of profit or loss and other comprehensive income for the year ended 31st December 2018, and the statement of financial position as at 31st December 2018.
So read the introduction.
So BICS Limited has a financial year ending 31st December. Its trial balance extracted as at 31st December 2018 as follows. All right, so the additional information. Additional information one. Now, the current value of inventory at cost at 31st December 2018 was 39.5 million Ghana cedis.
Hold on. When you are reading, you see, you are not just reading information, you are reading for us to analyze. So you take your time and take it point by point. For example, this is how you have to read it. 1, the current value of inventories at cost at 31st December 2018 was 39.5 million. You take your time so that we can analyze it. So start. Let's go over from footnote 1. Let's go.
Footnote 1. The current value of inventories at cost at 31st December 2018 was 39.5 million Ghana cedis.
So that's the value of closing inventory. Let's go on.
2. On 1st January 2018, BICS Limited sold some of its plant and equipment to a finance company. BICS Limited credited the sales proceeds of 25.6 million to revenue. Now, the plant and equipment was purchased for BICS Limited on 1st January 2017 at a total cost of 32 million and was being depreciated over its estimated useful life of 5 years. The cost and accumulated depreciation of the disposed assets is still included in the PPE cost and accumulated depreciation account. On 1st January 2018, BICS Limited began to lease the plant and equipment from the finance company on a 4-year lease. Lease rentals were 7.2 million, payable annually in advance. If BICS Limited had borrowed funds from the finance company on 1st January 2018, the annual interest rate would have been 8.5%.
Okay. So they are telling us that the person sold some plants and he credited that sale to the sale proceeds of 25.6 million. So he sold the plant and then added the sale proceeds to revenue. Now they are telling you that the plant was purchased some years ago, and then they said on 1st January 2018, he began to lease the plant back. So you see, a plant that you've sold and you have recognized the revenue. If later you lease the same plant back, then you have to derecognize the sale. Is that clear?
Yes.
Because when do we recognize the sale? If you look at IFRS 15, it says that you should recognize the sale when certain conditions are met. Number 1, when you have transferred the goods to the purchaser. Is that right? Number 2, when the purchaser does not retain any form of control over the goods. Is that right?
Yes.
So here is the case, you've transferred the plant to somebody. When you transfer the plant to the person, then you, the seller, you are still retaining control of the plant. You've leased it back and you are still using it. So you are controlling it. Then it is not a sale. Is that clear?
Okay. Yes, please.
So the first thing you do is working number 1. So as usual, you open your first page, then that's for the statement of profit or loss. Then you open your second page, that's for statement of changes in equity. And then your third page, statement of financial position. I told you the statement of financial position, normally 1.5 page will be okay. Normally, 1.5 page will be okay. So you open your eyes, and then from the middle of the second page, you can start your workings. So the workings, I'll begin with my workings here in working 1. Was the statement in thousands? Was the statement given in thousands?
Yes, Bishop, thousands.
So all figures in thousands of Ghana cedis. So working one, the revenue, meaning that, so give me the balance on revenue. Let's look through the trial balance. Look for the balance on revenue for us. Revenue is what? 184,800. 184,800.
100.
Now there is a proceeds from what? Sale and lease back, right?
Yes.
So proceeds from sale and lease back. The plant is sold that he leased it back. How much did he sell it? 25.6 million.
Yes, 25.
So take that
25.
out. So take that out for us. Some people should be working for us so that we can move faster. Some should be taking the calculator and be working for us. 159,200, right?
159.
159,200.
So this is our balance on revenue at that time. Then immediately, because now they've leased the plants, let us deal with the lease. Are you getting it? So that's a finance lease, so that you don't forget. Immediately you realize that they've leased the plants. Let's deal with the finance lease. Now, the plant they leased at the time he sold it for 25.6. That's what the value of the lease is. It means that the cost of the lease plants is going to be that 25.6 million. Let's read further. It says that the plant was purchased years ago at a cost of 32 million and was depreciated over its useful life of 5 years. The cost of accumulated depreciation of the assets is included in PPE. On 1st January 2018, BICS Limited began to lease the plant from the finance company on a 4-year lease. Lease rentals were 7.2 million payable in advance. So, yes, what do? We'll take out the advance payment, right?
Yes.
So, the advance payment, how much was the advance payment?
7.2.
7.2.
So, when we take 7.2 out, that will give us the balance standing. What will be the balance before? What will be the outstanding balance before we apply interest?
18,400.
18,400.
So the outstanding balance after that time is 18,400. Now they said what? If BICS Limited borrowed funds from the finance company, the annual interest rate will be what? 8.5%, right?
Yes.
Okay, so now we can apply the interest to it. So let's apply the interest to it at 8.5. Please calculate that for me. So interest at 8.5%. Yes. What would that be?
1564.
1564. So what would the total be now?
19964.
19,964. All right, so that settles it. Then let's move to note 3. Please, do we understand? Do we understand?
Mm-hmm.
Okay, so let's go to note 3. It said what? On 1st January 2019, BICS Limited issues 200 million preference shares at 32.5 cedis each. Cost of the issue were 1 million, so the net proceeds of the issue was 64 million. The preference shareholders will receive an annual dividend on 31st December each year of 3.9 million. The shares will be redeemed at par at 31st December 2022. And so the effective annual finance attached to the shares is 6.4%. The first quarter dividend was paid on 31st December 2018 and is included in dividends paid. The equity shareholders were paid a dividend of what? 4 million in the year. Now watch. They said the shares will be redeemed. So this is a redeemable preference shares. What did I teach you about redeemable preference shares? I said that once it is redeemable, then the interest on it qualifies at finance cost. Is that right?
Yes.
Good. So the preference shares, they are telling you that the net proceeds became what? 64 million. So meaning that in working 3, we can deal with the redeemable preference shares. redeemable preference shares. Yeah, so the interest, which is finance cost, should be, what's the percentage attached to it?
6.4.
6.4%.
6.4%.
So 6.4% of the proceeds of 64,000. Calculate that for me.
4096.
4096.
Yes.
So that's 4096. Therefore, if this is the interest on it, then it means that now we can calculate our total finance cost because we've gotten some from the list. Exactly.
Yeah.
So the interest from the leased plants. So the leased plants, we work that in working two, and then the interest on it was what? 1564. Am I right?
Yes.
Yes.
Then the redeemable preference dividend, redeemable preference dividend, which we've also worked in working three, also give us what? 4096. As we go, we don't know whether there will be further. We don't know whether there will be further interest. So let's leave that account. Let's leave that account open. Let's leave that account open, and then we move on. Yes. The next question. The estimated income tax on profit for the year, this is 4.5 million, blah, 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 blah. So what must we do? Quickly, when we hear income tax, what do we do?
Open.
Deferred income tax expense.
Okay, so let's open two accounts here. Working 5. So let's open two accounts. Deferred tax provision. So the deferred tax provision account, and then working 6. The income tax expense. So it says the estimated income tax on profit for the year to 31st December 2018 is what? 4.5 million, right?
Yes.
So that's current.
Yes.
So that's current year estimate, right? Current year estimate 4.5 million. During the year, 4.2 million was paid in full settlement of what? Income tax. And then for 2017. So during the year, they paid last year's tax for 4.2. And then the statement of financial position had included 4.4 in respect of this liability. So it means that they provided for 4.4. But when the taxman went through their statement, they actually ended up paying what? 4.2. It means they have a tax asset from the finance man of 200,000, true or false?
True.
You see, you've sent a check of 4.4 million to the tax authority. But later, when the tax authority examined your statements, they realized that the correct tax you are paying is what? 4.2. So it means that they are owing you 200. So that 200 will be an over provision, true or false?
Provision, yes. Yes.
So over provision. So over provision. I provided 4.4, but I ended up paying 4.2. So they are owing me 200. So it will reduce my next year tax, true or false?
True.
Then they are telling you that at 31st December 2018, the carrying amount of the net assets of BIGS exceeded their tax base by what? 35.8. This is what we call the temporary difference, right?
Yes.
So deferred tax, let's take the opening balance. Let's go to the trial balance and look for the opening balance on deferred tax. Last but 2. Opening balance is what? 8,000, I guess.
Yes.
Yes.
And so the closing balance now, they've given us the temporary difference. They said the temporary difference is how much? The temporary difference was how much? 35.8 million, right?
Yes, 35.8.
So 35 800. And then what's the tax rate? 25%.
25%.
So calculate that for us. I'm getting 8950.
Yes.
So the increase in the first chart, which I'll chart to P&L, is what, 950. You know, an increase in provision is an expense. It means more tax expense. Then you come and charge it here. Deferred tax increase. I think now you have become a master of the taxation. Right?
Right.
At least, if not for anything at all, when you meet taxation, that 6 free ticks, you can take it. Yes, calculate for us. Please calculate for us.
5250.
5250.
5250. Okay. 5250. Okay, so that is it. Then note number 7. Note number 5. Let's go.
So note number 5, the duties of property, plant, and equipment.
Are as follows. So they've given you their cost and their accumulated depreciation as at previous year and their carrying amount. And they've given you all of them, their useful life. Now, the person said on 30th June, the directors decided to sell the property because more suitable leasehold property had become available. They advertised the sale for at the date and was considered to be a realistic selling price of 68 million. They estimated a cost of 3 million would be necessary to sell the property. But on 1st December, they reduced the asking price to 64.5, and they sold the property at this price shortly after the year end. And then the cost total 2.5 million.
Yeah.
Okay, so let's calculate the depreciation on the plants. So depreciation on asset. Yes. So the property, buildings, if you look at the cost, what's the cost of buildings? It was 38,000.
38,000.
And then the useful life is what? 50 years, right?
Yes.
So for the year, building is 38,000 divided by 50 years. Please calculate that for us.
760.
760.
But then watch you. You see, the building, they were telling you that on 30th June, they decided to sell the building. So they sold the building at 30th June, meaning that for the current year, they only used the building from 1st January to what? 30th June. Are you getting it?
Yes.
So that's a period of 6 months. It means for the current year, the building depreciated only 6 months. Is that right?
Yes.
Yes.
Calculate that for us.
380.
So that's 380. Then there was a plant and equipment. Now the plant and equipment, the cost was 87,000. But do you remember that they sold some of the plant and later leased it back?
Yes.
So the one that they sold and they leased back, let's separate it. So we have plant and equipment. Plant and equipment. The total cost of plant and equipment was 87,000. But the one that they leased, the original cost of the leased plant was what? Look here, the leased plant, original cost was what? 32 million. They said it here, that the plant was purchased in 2017 at a cost of what? 32 million. Can you see?
Yes.
So I'll take that 32 million out. So that I will left with the plant left. And then the useful life of the plant was given to be what?
5
Plant
years.
useful life was given to what? 5 years. So the plant that was left over there, the useful life is 5 years. So depreciate it. Depreciate for me.
11,000.
Do you say 7,000 or 11,000?
11,000.
Okay, so that is 11,000. Then now the leased plant. The plant that they the lease back. That one is also what? 32,000 divided by what? 5 years, right?
Mhm.
Which gives you what?
6,400.
6,400. I've separated them so that on the statement I can separate them. So calculate all the depreciation for me.
17,780.
17,780. Okay. Then now the plant that they decided to sell. They said they decided to sell the plant. So that would be an asset held for sale, right?
Mhm.
Right?
Mhm.
So let's
Yes.
go and value that asset held for sale in working 8. Non-current asset held for sale. Now IFRS 5, non-current asset held for sale. He said the asset should be measured at the lower of carrying amount and net realizable value. True or false?
True.
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 Good. So the property, yes, cost of the property. So let's get the carrying amount. We'll take the cost of the property at, yes, the date. They said 1st January 2017. That was when it was bought. What's the cost of the property? The land element was what? Land element was what? 32,000, right?
Yeah.
And then the building element was what?
38,000.
38,000.
38,000. So the total cost of the property will become what? 70 or 70, yeah?
70,000.
So the cost of the property is 70,000. Now we will have to depreciate this property. So accumulated depreciation up to the end of 2017. So accumulated depreciation from that 1st January 2017 to the end of 2017, that's 31st December 2017. If you look at the PPE schedule, what's the accumulated depreciation? They gave us 9,120, right?
120. Yes.
So when we take it out, what will be the carrying amount as at end of 2017? So the carrying amount
60,880.
as at 31st December 2017. That gives you what?
6880.
Hey, please, I'm not hearing the voices of the rest. Too. Should I do my roll call?
60,880.
6880.
0. Yes.
But now we are in 2018. They decided to do it at 30th June 2018, right? So now,
Yes.
so we'll depreciate it.
That's
So
one.
depreciation, that means depreciation from 1st January 2018 up to that 30th June 2018. What was the depreciation for that period on the property? We've calculated depreciation here already. So let's go and take that 6 months depreciation. He gave us what? 380. Can you see?
380.
In working 7. He gave us 380. So we'll go there and say the 6 months depreciation in working 7. Let me position this one so that always you are safe. The depreciation from 1st January 2018 to that 30th June when they decided to sell, we got that in working 7 to what? 880, eh?
380.
It's 380.
380. So when we take it out, what's the carrying amount? Let's check the working amount.
6,500.
Somebody said last time working hour was not for yes. So when you net it off, you get what?
6,500.
6,500. So it means that the carrying amount, at that 30th June, when they decided to sell the property, was 60,500, eh?
Yes.
Yeah.
So this is the carrying amount. Now the net realizable value, asset held for sale must be carried at the lower of carrying amount and net realizable value, right?
Net realizable value.
Mm.
That's what we call fair value less cost to sell. So let's go with it. There's
Yeah.
NRV. The NRV. They said what? The selling price was reduced to what? 64 million, right? 64.5, right?
Yes.
So 64,500 minus cost to sell of how much? Cost to
2.5.
sell was what? 2.5.
2.5 million.
2,500. What would that give you?
62,000.
62,000. So when we do that, yes, what do we have? This is an impairment of how much?
1,005.
Okay, so the asset has not impaired because the carrying amount is rather less than this.
No.
It has not impaired, right? Good. So we'll carry it at what? Yeah, so the asset held for sale will be carried at what? The lower of the two. So how much is it?
60,500.
500.
So 6,500. So this is how much we'll carry the asset at 6,500. Are we okay?
Mm-hmm.
Mhm.
Are
Yes,
we
sir.
okay?
Yes, sir.
Yes.
Okay. So now the finance lease. Okay, we've tackled the finance lease. We've tackled all this. So I believe we are done.
Well, yes.
Now let's do our PPE schedule so that when we go to the statement, we won't come back. Let's do our PPE schedule because we know we need it. Let's do it once and for all. So 9. PPE, let's say property. Plant and equipment. Now, the whole plant and equipment at cost. Yes. So the PPE at cost, plant and equipment was what? 87,000, right?
Yeah.
Yes.
87,000. And so what was the accumulated depreciation brought forward?
29,280.
Accumulated depreciation, yes, brought forward was what?
400.
29,280. No, the accumulated depreciation of the plant and equipment.
29,280.
29,280. Then we had a depreciation for the year.
Additional depreciation for the year.
Then now we've sold the property, so it's left with only the plant, right?
Mm-hmm.
So depreciation for the year. Which we have in working 7. We had 2 of them. The plant itself gave us what? 11,000, eh?
Yes.
So the used plant gave us what? 11,000, right? And then the sold plant
Yeah.
also gave us what?
6,000.
6,400, right?
Yeah.
So when we add all, what will be the total depreciation? When you less them off. So you add the total depreciation for me.
46,680.
46.
680.
Let me just add on and take it out. You got 46,680.
Mm-hmm.
So
Yes.
when I add all, I get 46,680. So when I take it out of 87,000, what do I get? What do I get at the final?
4,320.
320.
43,20.
320.
So our PPE value will be 43,20. So we can prepare the statement right now, right?
Yes, please.
Let's go up and prepare the statement. What's the name of the company?
Biggs
So also
Limited.
Biggs Limited. So Biggs Limited. Statement of profit or loss. and other comprehensive income for the year ended was 31st December 2018. So let's put down our thousands of Ghana cedis. So what is the revenue? We worked it in working one. The revenue in working one. Let's go and check.
159,200.
159,200.
Okay, so 159,
200.
200, right?
Yeah.
Now, cost of sales. Yeah, so we need to go and work the cost of sales. We need to work it because we'll add the depreciation and the rest. Okay, so let's leave it for now. When we take out cost of sales, we get gross profit. So let's do our pro forma. We're going to work it later. Gross profit. Okay, check whether they are operating expenses, admin and distribution. Are they there?
Yes,
Yeah.
please.
So admin expenses. Yes, administrative expenses. How much?
20,000.
90,000.
20.
20,000.
20,000. That's admin expense. What about distribution expense?
9,000.
Distribution is 9,000. So distribution expenses also 9,000. So when we take that out, we'll get the profit before interest and tax, right?
Yes.
Also known as operating profit. So profit before interest and tax. Okay. Now, finance cost. Finance cost, I think we worked it. We'll go and pick all and put it there. Then check the trial balance. Is there any investment income? Check the trial balance. Do we have any investment income?
No.
So no investment income. So when we less finance cost, we get profit before tax. Profit before tax. Then we less the income tax expense. What was our income tax expense? Please, finance cost. What figure did we get?
5660.
5 what?
660.
Working number what?
Working number 4.
Okay, number 4.
5660. We'll go up and check all that. Income tax. Working number what? Income
6.
tax. Working number 6.
6.
And you got
5250.
5250. I take that out. Then I get a profit for the year. There was nothing like revaluation, right?
Yes, no revaluation.
So profit for the year. No revaluation. Okay, so let's go up and pick our figures and put it there. I think we have to work the cost of sales, right?
Mm-hmm.
Yes.
So that will be working number what?
10.
9. Let's go to working 10. Let me do that before I do the statement of financial position. Since I was working 10. Yes, my cost of sales. So the component of cost of sales, go to the statement, give us the component of cost of sales, opening inventory, blah, blah, blah. Opening inventory is what?
37,500.
Opening inventory, 37,500. What other costs are there? Production costs. Production cost is what? 98,000, right?
Yes.
Yeah.
Production costs 98,000. Then we have closing inventory. How much is the closing inventory?
39,500.
Closing inventory was in note 1.
Yeah.
That was 39.5. So
Yes.
500. But then I have to add the depreciation to it. Is that clear?
Yes.
Yeah.
Depreciation, we work depreciation working on what?
7.
Even
The total depreciation was what?
17,780.
780.
17,780. So add it to our cost of sales. Total the cost of sales for me. So total the cost of sales for me.
113,780.
One,
113,780.
okay, so let's go and put that there. One, 113. So that's working number 10, eh?
Yeah.
113,780. Should I take that out? What will be my gross profit?
45420.
4,500.
420.
Okay, so take out the administrative expense and distribution expense and let's see.
16,420.
16,420. When you take out finance cost, what will be the profit before tax?
10,760.
Hey, your this thing is
10,760.
10,760.
okay. Please, let me share the board again. The board has started misbehaving, so let me share it again. Let me first pause the record. What will be the profit before tax? The profit before tax.
It will be 5510.
No, the profit before tax.
Okay, that one is
60.
5660.
Are you sure?
10760.
10.
760.
Now, one will less it. What will be the profit for the year?
5510.
So this is the profit for the year. Let's go to the statement of financial position. Let's go to statement of financial position. Biggs Limited. Statement of financial position. As at 31st December 2018. Non-current assets. So PP. Yes, when we did our PP, what did we get? When we did our PP,
40,320.
that was working on what?
9.
4320.
Yes, please.
Then current assets. So in Ghana, there is no day that internet will be flawless throughout. Okay, so current assets. Yes, inventories. So inventory, give me the value of the closing inventory.
39,500.
39,500.
Yeah.
What about receivables?
51,000.
Receivables were 51,000.
Yes, sir.
51,000. Then cash. Do we have any cash?
13,800.
Okay, so
Cash and cash equivalent.
13,800. Now, since we have an asset held for sale, we have to recognize as a separate line item. Do you remember?
Yes, sir.
And a non-current asset. Asset held for sale. That's working amount. Asset held for sale. The final balance was what? 6,500 or so.
Yeah.
65.
6,500.
That's working amount.
So working 8.
Okay, next.
So this will be our total asset. Let's deal with equity. So we didn't prepare a statement of changes in equity. Here there was no changes, so there was no changes, so it wouldn't be so necessary. Yes, share capital. Since there was no changes, it wouldn't be so necessary. The share capital was what? Last but I'm seeing 53,000.
53,000.
53,000.
Now retained earnings. So we have to work the retained earnings. Retained earnings. We have to work it. So you see why we always advise that in your exams, your presentation, your statement must come before the working. Is that clear? Because if you prepare
Yes.
your statement before the working, if you've left some of the working out, you have the chance to add. Are you getting the point?
Yeah.
So retained earnings, we'll go and work it. Apart from that, there was no other reserves. So non-current liabilities. So let's take non-current liabilities. Yes, non-current liabilities. We have a finance lease. So the finance lease, we have to split into a current and non-current portion. So we'll do that finance lease. Then there was a redeemable preference shares, right? How much
Yes.
is the redeemable preference shares? Redeemable preference shares, how much was it? From the question. It was 64,000, but in note 2, we did a working on it and I remembered. Yes, the preference shares.
4090.
No, the preference shares that what is 4090?
The interest was 4096. What?
The interest was for 4096.
96.
And then a moment. Okay, what? They said, oh, please lift it up. Please, a moment, I'm coming, a moment. Lift it up, I'm coming. A moment, please.
Okay.
Yes, so you put it down and then I'll come for it later. I'm teaching. Let me finish. I'll come for it. Okay, so the redeemable preference shares. Yes, you said the interest on it was what?
4096.
4096.
But look at the question. They told us they pay some dividend. They said it was this, and then the cost of issue was 1 million, making the sale process, the process 64 million. But then they said the preference shareholders will receive an annual dividend every year of what, 3.9, right?
Yes.
So we have to work it because we'll add the interest and take out the dividend. Are you getting it? We have to work it. We'll add the interest, then we'll take out the dividend. So we need to work it to see the value. Apart from that, I think there was deferred tax, Deferred tax.
Yes.
Check the taxation working. Deferred tax. What was the working number?
Number 5.
Working number what?
5.
5. What was the closing balance of deferred tax?
8950.
8950. Then let's go to current liabilities. We'll work all this and put it in. So current liabilities. Yes, current liabilities. Was there payables?
Yes.
We didn't do any working on. What's the payables figure?
18,000.
Let's be sure. Let's look at the trial balance. Where is he picking the payables figure from? Okay, I'm seeing this here. Trade payables 18,000. So trade payables 18,000. This network thing, eh? I don't have a deal that. Okay, 18,000. Then the income tax. Current tax payable. The estimate, the current year estimate.
4,500.
That's working about what?
Working 5.
4,500. Then the finance list. So the finance list will split it into a current and a current portion. So, okay. So that is it, and I will close it. So let's go and work them. What and what are we left to work? Let's work them. Let's see, what and what are we left? We are left with the retained earnings and then finance list and preference shares, right? How many workings have we done so far? 10, eh? 10 workings, right?
Yes.
Yes, sir.
So let's go to working 11 and work the retained earnings. So working 11. Yes, retained earnings. Give me the opening balance of retained earnings.
35,000.
35,000. Then I think we got a profit for the year. So give us the profit for the year.
5,500.
Profit for the year. What did we get?
5510.
5510. Then you take another. The dividends you take out here is the equity one, the equity dividend. Remember, there was preference dividends which we took as finance cost. So the equity dividends, I think they told us here that look at the where they have the preference shares. They told us that the shareholders paid a dividend of what? Were paid a dividend of 4 million. So the shareholders' dividends is the equity dividends. Is that clear?
Yes.
Yes, sir.
So that's 4,000. So when you take it out, what are we getting for retained earnings?
36,510.
36,510. That's working 11. Okay. So apart from that, the finance lease, 12. Okay. The finance lease liability. So the finance lease obligation. Now, the finance lease, when we put the total liability at the end of the year, yes, what do we get? So liability at the year end. When we did the first working, what did we get as the liability? Check your first working. The final.
964.
That's working number what?
Working number 2.
We got 19.
964.
964. Now, out of this 19,964, immediately next year, we'll pay 7,200. So that will be the current liability. So the current liability is what you will pay immediately next year, which is 7,200. So the rest becomes non-current. Is that clear? The one you pay immediately next year becomes the current liability. So the rest will become non-current. Calculate it for me. Yes.
12,764.
12,764. So we'll put it there. Then the preference shares. The redeemable preference shares. since there was a dividend paid, we'll have to factor it in. So the redeemable preference shares, the opening balance, that's the net proceeds. The question said it was 64,000, right? That's 64 million. And then you got the interest. You got the interest. The finance cost on this deal is what?
409.
Which was working about what?
3.
4096. That's working 4096. So we add the interest and then we pay the dividend. Is that dividend of 3.9 was received, right? They say every year they receive dividend of what? 3.9. Is that not it?
Yes.
Look at the question. He told you that they always receive dividend of what? 3.9. Are you getting it? At the year end. So at the year end, we'll give them their dividend of 3.9. So take it out. Let's see the total.
64,196.
64,196. Okay, so let's go and put them in the statement. Retained earnings is 36,510. So retained earnings, we got what? 36,510. That's working about 11, right?
Yes, sir.
Then the finance list, the non-current portion and current portion. Yes, the current portion was 7,200. The current portion was 7,200. And then the non-current portion was what?
4764.
764. Okay. Is that all? The redeemable preference shares, we got 64,196, right?
Yes.
So that's working number 13. 64,196. So let's check if we balance.
Yes, sir. It balances.
Hey, you've done that already.
Yes, sir.
That's a smart move. Please, total asset give you what?
205,120.
205.
120.
205,120. Is it the same as the equity and liabilities?
Yes, sir.
205,120. 205,120. Okay, so that is that. So who will take our pictures for us today? Who will do it for us? Who will take our pictures for us? Whilst we wait for the video, at least the one who records who uploads the video, he also does some work. So sometimes it takes a day, but some people want to revise it immediately. So once we have learned, let's help ourselves by putting it on a page. Who will take the pictures for us?
I'll do it.
Hey, they are quiet. Okay, let me do my real quick.
Francis has been doing it all the time. Francis has been doing it.
Okay, Francis is here.
Yes.
I'll do it.
Francis will do it. Yes, I'm seeing some people who have muted themselves. Let me start mentioning their names. Apiasa Plessy Prince, Ben, Cindy Apia. They started on muting. Apiasa Plessy, Esther Naam Eli Hammond. Esther Naam Eli Hammond, where is she? Esther Naam Eli Hammond, Felicia Morrison, Gifty, where are they? It means Esther is sleeping.
We are here. My band is
We are here.
Say, I'm here.
But we have to prepare for our kids to school too. So we are doing the
Helena and then Prince Holdbrook with Richard Aoku and co.
Yeah, I'm here.
Okay. But Ghana, why do we allow children to go to school at 6 a.m.? These private schools, they are worrying. Small there.
It's
You want them
traffic, so they have to leave early to beat the
6 a.m.
traffic.
No, it's not traffic. The thing is that parents, you don't want your children
Just want to
you don't
No,
want
it's
your
also
children
the traffic. It's
No,
also the
no.
traffic. Depends on where
You
they
don't want to disturb you. So you yourself, you are in a hurry to push them to the teacher so that they'll take care of them.
exactly.
it's the traffic. It's the traffic.
Say you are right in some way.
Because
Oh no, it's the traffic.
I visit
No, it's
my
not traffic. They are Monja.
Oh, because
visit-
people.
oh I
I'm a
I
right.
visit my
I'm a
elder
right.
sister and she will tell me, I'll visit my elder sister and she will tell me a 6-year-old girl is going for this vacation class. What is vacation class for
It's the
6-year-old?
traffic.
They have to play and be happy. It's a vacation class. When you are going to work and you want to push the children to the teachers to take care of them for you, then you say,
They don't want the
Those
kids to worry them.
It's the traffic.
do that for us. The first one. So take working 1 and 2, Francis. Francis,
Okay,
please take
it's
working
done.
1. Is it done?
Yes, sir.
Then let me go to. Okay, so take 3, 4, and 5 for us. 3, 4, and 5. Is
Okay,
it done?
done. Done.
Okay, then. Think 6 and 7. So take 6 and 7 for us.
Done.
Then you take number 8 for us.
Done.
Let's look at number 9. You take number 9 for us. Are you done?
Yes, please.
Let me go to the 10, 11, and 12 and take that one first. Take working 10 for us. Take 10 for us.
Okay, done.
Let me go to 11 and 12 and take that one first. Take 11 and 12 for us.
Done.
Then take 13. Take 13 for us.
Done.
Then let's go to the P&L. So take the P&L for us.
Business.
Then the statement of financial position.
Please, the P&L couldn't capture or the latter parts did not come.
Oh, really?
Yes, please.
Like this? Is it okay?
Okay. Yes, sir.
Then the statement of financial position. Take this one. Have you done that?
Yes, please. Done.
Take the equity and liabilities. Are you done?
Yes, please.
All right. So, colleagues, I think our preparation of financial statement is strong now, right? Hello?
Yeah. Yes.
Mm-hmm.
At least for the tax for the ISA 12 taxation day, I think that one is solid, right?
Hello, let me hear the voices. Is everybody on board?
Yes, I think we are now stronger than before.
Now,
let's
let's
say I still have this issue with police.
What's the issue?
Lease. The issue surrounding lease and all, that particular standard is giving me problems.
We will come to standards, so you understand. You see, what you people need to know is that standards, you will need it for 20 marks in question 2. The same standards, you also need it for standards is 25 marks. You have 20 marks in question 2 and 5 marks in question 5. You also have the standards to under the published account. So very, very important. So as a student writing FR, you must make sure that your standards is strong. You must make sure that your standards is strong. Or if you don't survive, you don't understand the standards well, your chances of passing is limited. But this must be the strategy. Even if you don't understand well, you must pass the exams. So for the exams, this is what you must note. You see, anytime you are dealing with published accounts, look at this. Everybody knows that it is the published accounts that you lose a lot of marks in the exams on, that one and standards. So where you know that you will definitely face problem. Abi, you have been doing management accounting, right?
Yes.
Those of you who do management
Another
accounting,
killer one.
those of you who do management accounting, when you are doing decision making, you say some costs are irrelevant. Is that not it?
Yes.
Yes.
So apply that wisdom to financial reporting. There are some questions, they are irrelevant to your success in the exam, so because you know that no matter what you do, you will suffer there. No matter who you are, you cannot write FR, be in the exam, so and then be rejoicing whilst you are working standards and published account. That is the most difficult aspect. That's where students lose a lot of marks. So where you know that the students gain a lot of marks, make sure that you strengthen that place to the extent that you can get majority of the marks. And I always tell students, look, if they ask you, when they give you the paper, the 15 minutes planning time, this is what you must do. During the 15 minutes planning time, you don't use the planning time to solve questions. So you look for the theory questions. What you must do is you look for the theory, tick all the theories, all the theory questions in it. It will come from ethics, conceptual and regulatory framework, and then
sustainability. Now the sustainability.
Now
They are bringing
sustainability.
sustainability. They are not bringing those ethics again.
Don't worry. Not that they are not bringing it again. They are testing, because sustainability is a new area. They are testing it, but don't write off ethics. This that you can have something small on ethics and something on sustainability. So look for those theories. Now, when you look for those theoretical areas, then what you will do is that you also select your best two. Then you also choose your best two calculations. You choose your best two calculations. This is how you must answer the question. So choose your best two calculations. So when you do that, if they ask you to start work, once you have done that, if they ask you to start work, what you will do is that use the first 20 minutes, time yourself, the first 20 minutes, use it to answer the theories. So that out of that 15 marks, you look for about 10 from the sustainability issues and conceptual and regulatory framework. Just look for about 10 marks. Then now you split your two best calculation, 35 minutes. That's 70 minutes. You answer your two best calculation, and your two best calculation will be console, and then interpretation. So you must work. When we get to interpretation next week, I'll teach you to be able to interpret the statement within maximum 35. You must not spend more than 35 minutes there. So your console, practice it and make sure that at least out of the 20, you can get 15. And I'm sure with what I've taught you, nobody should get less than 15. You will lose.
Yes.
So you lose about 10 ticks before you lose 1 mark. When you lose about 10 ticks before you lose 1 mark, so 5 marks there, even if you can't see anything at all, by the time you do growth structure, you calculate your cost of investment and calculate net assets and goodwill. Even if the petty standards, you will get the 15. Get your 15. Interpretation, which is 15 marks, look for 10 marks. So you see, when you train yourself this way, what it means that by the time it will be 1 So now your chances are very high.
Gifty, please, can you mute?
You see, now your chances of passing is very high. So you just relax. Then the next 1 hour, you share it 30-30. You share it 30-30. Now 30-30, you use 30 minutes to do the publishing of accounts. So you use 30 minutes to do the preparation of accounts. That's why I tell you, preparation of accounts, because that is the difficult area. Just look for 10. And the 10 marks, the moment you write down your pro forma for the PPNL, your pro forma for statement of changes, there are some petty things. The moment you calculate that one alone, it will give you the 10 marks. I'll tell you. I'll teach you what to do there. Then you see, when you do that, you will see that now you have taken 30 minutes preparation, then another 30 the standards. So the standards no matter how difficult they are, out of that 25 marks, don't worry yourself. You go and look for just about 8 marks. Just about 8 marks. Let them take all 17 marks, lose it. Just take about 8 marks. You will see that what it means is that within 2.5 hours, you have your marks already. You see the point? You have about 53 marks.
Yes.
So 2.5 hours, you have it. Now the final 30 minutes, the final 30 minutes, you use that to go over your work. You use that to go over your work, and then you make top-ups. So you go over your work. Wherever you can make top-up, then you make the top-up. You go over your work and make top-ups. So you see, ICA is not saying that. Some of you, the mentality you are using to write the exams is academic mentality. Let me defeat that for you. Look, so when you make top-up, you get additional marks. So no matter what, as for the 50 plus there, it will come. So definitely you should pass the paper. Now, some of you are writing the exams with academic mentality, just like you are in the university. You should know that ICA is not saying come and write the paper and get 80%, 85%, so that you get A minus, B plus, and that kind of thing like you have been doing in the university. Here, you are looking for only 50 marks to pass. And so the strategy is, ICA is saying that this is the 100 marks in the basket. Choose your best 50 marks, then make sure you attempt every question. So you select the questions that will give you the 50 marks quickly within some 2 hours. Then the rest of the time, you use it to attempt the questions you've not answered. That's what you must do. But rather, students will be in the exam so solving all the questions, question 1, question 2, question 3, in anticipation that they will get 50 marks. If you do that, time will be against you. You must
It's true.
That how many minutes will I use to answer my 2 best calculations? So you time yourself the minutes and then answer your best shots and get your marks first. After you've answered your best shot and you've gotten your marks, before you go and attempt the rest of the questions. Now, the 10 marks on preparation of accounts, that 10 marks on preparation of accounts, you will get it from here. You see, 10 marks on preparation of accounts, question 3, you will get that 10 marks from here. Always make sure that the statement, you have written down the headings of the statement well. So the headings, well written. They mark everything, so be careful. The headings, well written. Statement of profit or loss and other comprehensive income for the year. Write it carefully. Then the date, your date well written. Make sure that the date is well written. If it is 31st December 2019, like this, 31st December, remember to put there your comma, and then 2019, like that. Ensure that if it is in thousands of Ghana cedis, your thousands or millions of Ghana cedis, remember. Your thousands of Ghana cedis or your millions of Ghana cedis, remember. Now, underline the statement decently. Use a ruler. Don't use your hand. Underline it decently. This will give you your first 1 mark. Now, the rest of the marks, you will get it from these workings. Every day, these workings are there. They will give you free ticks. Watch. You will see that depreciation, no matter what, you do depreciation. No matter what, you do depreciation, right?
Tax.
Depreciation will give you cost of sales working. Cost of sales will give you marks. Now, dividends wrongly charged as expense. Dividends wrongly charged at expense. There are some things, they are always there. So dividends wrongly charged at expense, which you value out. Then income tax. Income tax, move the P&L and the deferred tax. Move the P&L and the deferred tax. They will all give you ticks. Then your PPE schedule. Your PPE schedule. At least PPE, they're easy. Everybody knows how to do PPE. Your PPE schedule. Then the finance cost issues. Know the component of finance cost. Finance cost component. You see, every day, these things are there. Even if the other standards under it, you can solve. The thing is that they will not give you more than 7 footnotes. Please, are you listening carefully to me?
Yes, sir.
Yes. They will not give you more than 7 footnotes. And then the 7 footnotes they will give you, you will see something like this in its depreciation. Something like dividends wrongly charged. Income tax will be there. Your PPE schedule will be there. So at least if the thing is 7 footnotes and you have been able to tackle about 4 of them correctly, the rest of the 3, if you can solve, ignore it, but make sure that when you prepare the statement, the figures that should go into the statement, you put it down. In the statement of financial position, there are a lot of free ticks for you. Some of the free ticks are inventory, right? Inventory, payables, if there is a loan, you see, then your income tax, look, income tax and deferred tax, when you work it and you get the ticks in the working, you will go and report it on the statement and get another tick there. Are you getting the point?
Yes.
Are we getting the point?
Yes.
Yes, sir.
Yes.
In your statement of changes in equity, of changes in equity, the opening balances you will put down alone. Then you put the profit of the year also. Those ones too also give you ticks. So if you are able to do just this, it will give you not less than 10 marks. You see, most of you do not know how the papers are marked. So your thinking is that you must do something extraordinarily to get the marks. No, you gather the ticks to get the marks. The moment you've written down your heading well, you have done everything well, you've underlined it, you have statement of profit or loss and other comprehensive income for the year ended nicely written. You have statement of changes in equity nicely written, statement of financial position nicely written. Your workings, you take your time. Do the common ones, the depreciation, now the revenue, you've seen where revenue is adjusted. If there is a sale or lease, by take it out, and then that deferred revenue and those things. Those petty things you've learned, focus on them and then work them well. Income tax, present it, and then go and write them on the statement. You'll get your 10 marks. Look, when we started the work, we finished the whole thing before 5:30, meaning that even when I'm teaching you and I'm explaining to you, look at the time we've used to solve it. So if you've practiced it and you are alone and you understand and you are solving without explaining, within maximum 35 minutes, you should be done and collect your marks. That alone is enough to give you 10 marks. When you go to the standards too, if you take the question you cannot solve, just attempt it. For example, if the standard is on, let's say, impairment, you know that to test for impairment, you compare carrying amount and recoverable amount. So if you can't do anything at all, at least write down the cost of the asset and the depreciation. That alone will give you 1 mark. Are you getting the point?
Yes, sir.
If you can't even answer the question, you write down the cost of the asset and then the depreciation and leave. You go to another standard. If the standard is on financial instrument, you write down the proceeds from the loan. You write your amortization schedule, the year, the opening balance, effective interest minus cash paid and closing balance. Just put the figures in, even if they are wrong. Even if the figures you are putting there are wrong, show your pro forma to tell the examiner that at least you have done the working, but it is the figures that are wrong. That alone is enough to give you 1 mark. So you can get 1 mark from all the 5 standards. If it is 1 mark and you get from there, that is 5 marks. So imagine you've gotten 5 marks in standard. They are 25. Let them take all the 20. You let them take all the 20 and just take 5 marks. If you've taken 5 marks, these 2 alone has given you 15. If you get 15 in console, is that not 30? If you go and get 10 in interpretation, how much is it? Is it not, 40 marks? You've gotten 15. If you get 15 in console, that is what, 30 marks. You go and get 10 interpretation, that is 40.
45.
Then you work around for 45, and then you work around for your, you work around for the 5 marks from the theories and then attempting all questions. So it should be easy for you to pass. By your training is what will tell how many minutes you use to solve the question. And so practice more. Now, I would like us to suspend the preparation of financial statements here. The little time that is left, about 10 minutes to 20, let me use it to explain cash flow for you, so that our next meeting, we can tackle cash flows and close chapter on this. Then we go to interpretation. When we finish interpretation, we'll come back to the standard. Now, master you the standards very well. Then the last minute, we talk about the sustainability and ethics issues. Look, I have no doubt that if you have strengthened your console, you can prepare financial statement at least halfway. You can solve the standards at least, even cut across, and you can do your interpretation very well. You take the theory marks on ethics and the rest. There's no way you'll be a casualty. In fact, it's rather unfortunate. I am not the one lecturing you financial reporting in your various schools, but I believe that your teachers are doing their best. They are teaching you what you are supposed to know. It is up to you to now sit down and revise very well. But I also have no doubt that with this rush hour we are doing, the kind of strategies we are putting in, I'm doing my best to make sure I explain the thing to the basic minimum for you to understand. This effort should not be in vain. This effort should not be in vain. You cannot wake up 4 a.m. every day, you don't have enough sleep, and at the end of the day, you go to the exam or two and you don't come out well. Then what is the essence of waking up at dawn? So let us work hard. Let me use the rest of the time to introduce cash flow to you. Let me introduce cash flow to you. Now, IAS 7, statement of cash flows. Now, you may need to put down some few notes here. You know, as usual, that's what I do. Once I introduce the topic to you, when we are solving questions, you flow. Now, the statement of cash flow, first of all, why do we prepare statement of cash flow? The objective for preparing statement of cash flow. Why do you think we prepare statement of cash flow? The objectives are two. First of all, the reason why we prepare cash flow is that, IAS 1, the preparation of financial statements, it requires that a complete set of financial statements should include the following. 1, a statement of profit or loss and other comprehensive income for the year. 2, a statement of changes in equity for the year. 3, a statement of financial position as at the year end. 4, a statement of cash flows. Before 5, the explanatory notes. So a statement of cash flow is a requirement. It is part of the financial statement. So the main objective is that it is to ensure that all entities present Please, I think the network is slow, so you have to be writing though. Hello?
Yes, sir.
Hello?
Yes, sir.
We are here.
The network is bad, so you have to be writing. The network is bad, so you have to be writing. To ensure that all entities present an analysis of changes in cash and cash equivalents, changes in cash and cash equivalents, changes in cash and cash equivalents over the period, changes in cash and cash equivalents over the period, yes, by means of a statement of cash flow. By means of a statement of cash flow. Everybody must show how cash goes in and out of the business by means of a statement of cash flows. That is number one. And then the second objective is that to classify cash flows, that is inflows and outflows of cash. To classify cash flow, that is inflows and outflows of cash, into those arising from operating activities. To classify cash flow, that is inflows and outflows of cash, into those arising from operating activities, investing and financing activities. So operating activities, investing and financing activities. So this is why we prepare cash flows. Now, if you want to prepare a statement of cash flows, this is how you should present it. Can I move up?
Yes, sir.
If you want to prepare a statement of cash flows, this is how you must present it. When you put down your title, that, okay, so and so limited, let's say you put down your title and say Bishop Limited. When you say Bishop Limited, and then you put down the title, Statement of Cash Flows. Statement of cash flows for the year ended. Let's say 31st December 2020. If it is in thousands of Ghana cedis, you put down your thousands of Ghana cedis as usual. Now, the very first page on which you are working, you name that one cash flow from operating activities. You say cash flow from operating activities. Cash flow from operating activities. That is the first page. Leave the whole page. Leave the whole page for operating activities. The whole page for operating activities. Then you go to the next page. Leave the whole page for operating activities. Then you go to the next page. Assuming this is the next page, the beginning of the page, you put down cash flow from investing activities. So cash flow from investing activities. The beginning of the page, from investing activities. We'll put down the investing activities here. Cash flow from investing activities. Then that should be 2 columns. So you have 2 columns here. Operate 2 columns for investing activities, 2 columns. So you list your figures here, then you total it and put it in the second column. Then you go to the middle of the sheet. So the beginning of the page, you say cash flow from investing activities. Then you go to the middle of the sheet, So the middle of the sheet, so let's say I put this at the beginning. Then you go to the middle of the sheet. So the middle of the sheet, put the cash flow from financing activities. The middle of the sheet like this. Then you put the cash flow from financing activities. Cash flow from financing activities. Cash flow from financing activities. When you do that, then the last 3 lines on the page, the very last 3 lines, you use that one for your balances. So assuming this is the last 3 lines, the very last 3 lines, then you write net cash flow. So the last 3 lines, you put the net cash flow. The net cash flow. You say net cash flow. The very last 3 lines, you put the net cash flow. Net cash flow. Then the opening balance. The opening, and then you get the closing balance, the closing. Opening, and then the closing. Then where you have the closing, go and close it like this. Where you have the closing, close it like this. So this is how you set your pro forma. After setting your pro forma, the workings, this is how you do the workings. When you have set your pro forma, the workings, this is how you do the workings. Your first working should be an analysis of cash and cash equivalent like this. If I put down my workings, if they are in thousands and I say all figures in, say, thousands of Ghana cedis, if I have done that, my first working, you call it analysis of cash and cash equivalents. You say analysis of cash and cash equivalents. Analysis of cash and cash equivalents. Now, they will give you statement of financial position for 2 years and statement of profit or loss for the current year. If you are working for the current year, let's say the current year is 2020, then they will give you statement of financial position for 2020 and 2019, like this. You have 2020 here. They'll give you statement of financial position for the year you are working for, 2020. You will have that 2020 year, 2020. Then you have the previous year to 2019, like this. The cash and cash equivalents should comprise of 4 items. The 4 items are this. If you have cash in hand, if they separate it, fine. Cash in hand, put 2020 down and put 2019 down. Then maybe you have cash at bank. Cash at bank. That one to put 2020 down, put 2019 down. You know, you will see all this under current assets, right? Hello?
Yes, sir.
Yes.
Hello.
Yes.
You know you see all
Yes.
the current assets, right?
Yes.
Then if there is any investments under current asset, a short-term investment, which is under current assets, if you see any short-term investment, which is under current assets, it will tell you that maybe the investment is an investment in a 30-day government bond. Those are short-term investments. They are also liquid assets, cash and cash equivalent. So all these under current assets, put them down. Put them down so that you have the 2020 balance and then the 2019. Just put down 2019 figure and 2019 figure. Then the last one is overdraft. Where will you see overdraft? Where will you see overdraft?
The current liability.
Current liability. You know overdraft is a negative cash, so you take it out. Is that clear? Overdraft, yes. So you take it out. So when you take it out and you close it, assuming this one gives you XA and this one gives you XB, these two figures, the 2020 balance is the closing balance. So you go and put it here where the closing is. You put the XA here, the closing. Then the 2019 balance is the opening balance. So you put it here, XB. Are you following?
Yes, sir.
Then you use that to get your net cash flow. So first three free marks, you use that to get your net cash flow. So your net cash flow, to get it, you will subtract the closing minus the opening. Is that clear? Is that clear?
Yes, sir.
So just take this closing you see here minus the opening and see. Just subtract the closing minus the opening. So you take your calculator, whatever figure is there, subtract the closing minus the opening like this, the XB minus the XA. Do it, but don't show it for the examiner. I'm teaching you, so but don't show this. Just use your calculator to subtract and then you put it down. So you get your first three free ticks over there. You get your first three free ticks over there. When you finish, then you start your workings. So that one, if you have the paper will tell us. If we get the question paper, the question paper will tell us. The question paper will tell us how we should deal with it. So when we get the questions, I'll teach you how to deal with it. But then, the operating activities, this is how you deal with it. To get the operating activities, memorize this before the next meeting. Memorize this before the next meeting. Let me just show you how to get the operating activities. Try and memorize it before our next meeting, then we'll use it. So the operating activities, this is the strategy you use to handle it. The indirect method says that you should begin with profit before tax. So let me put that down for you. You begin with, you have to begin the statement with profit before tax. Profit before tax. So you take your profit before tax figure and put it down. Then you adjust it back to profit before interest and tax. So adjust back to profit before interest and tax. When you adjust it back to profit before interest and tax, then you remove the effect of all non-cash items. So you remove the effect of all non-cash items. You remove the effect So you remove the effect. This network. So you remove the effect of all non-cash items. remove the effect of all non-cash items. So you know the non-cash items, depreciation, amortization, impairment, fair value gain and loss. You remove the effect of all non-cash items. Then when you finish, you perform working capital changes. You perform working capital changes. You perform working capital changes. In fact, that's the longest part. So if I give you this clue, as for cash flow, if you are lucky and they examine cash flow, the least you can get is 18. As for cash flow there, the method we use to teach you, the least you can get is 18. Don't stress yourself so much. So you perform working capital changes. Then the last one, you account for interest paid and tax paid. So you account for interest paid. You account for interest paid and tax paid. You account for interest paid and tax paid. So you see, these are the processes. You first make sure that you start from profit before tax. Then you adjust it back to profit before interest and tax. Then you remove the effect of all the non-cash items. Then I perform working capital changes. After performing working capital changes, then you account for interest paid and tax paid. So you see that when you have a statement, the statement looks like this. A normal P&L statement looks like this. I've taught you how to prepare statements of profit or loss already. So you shouldn't have a problem with that. A normal P&L statement looks like this. You know, we have sales. A normal statement looks like sales. Then you have cost of sales. When you take it out, you get what? Gross profit. Is that not it? You get gross profit. And then you take administrative expenses. So administrative expenses and distribution expenses, you take them out. Distribution expenses are taken out. Then this gives you the profit before interest and tax. Is that not it? Then you less finance cost. Whilst we less finance cost, if there is any investment income, what do? You add it, right? Then if there is any other income like profit or loss on disposal, we are left with just about some 2 minutes to finish. Let me finish that and then we leave. So you have profit or loss on disposal. In fact, the network is so terrible. You let us end it here. I think in the next meeting, we'll be able to make headway. Where we have gotten to is enough. Just have in mind that the first page, when you title it cash flow from operating activities, you leave the whole page for operating activities. When you go to the second page, the beginning of the page, you put the investing activities, then you create 2 columns, thousands of Ghana cedis, 2 columns. Then somewhere in the middle of the page, you put the financing activities. Then the last 3 lines, you put the net cash flow, the opening and the closing. Is that right? Are we okay?
Yes, sir.
Yes, sir.
When you have
Yes,
done
sir.
that, in your workings, which working did I ask you to do first? The first working should be what? An analysis of cash and cash equivalent, right?
Yes, sir.
Now you've known what the cash and cash equivalents are. There are 4: cash in hand, cash at bank, any short-term investment, which you can find under current assets, right? And then overdraft. But you have also noted that overdraft is a negative cash. So since overdraft is a negative cash, what will you do? You take it out. So these things to give you your net cash flow, opening and closing balance. Then you go and put them there. Put the closing balance there. Put the opening balance there. Subtract the closing minus the opening to get the net cash flow and put it there. And get your 3 free ticks. Now the operating activities, what have I taught you? I said you should start from profit before tax. So in my statement, I'll do this. I'll put down my profit before tax. When I put down profit before tax, then you adjust it back to profit before interest and tax. So from profit before tax here, when I'm going back to profit before interest and tax, what are the things I'll meet on the way? Finance cost, investment income, any profit or loss on disposal. If there is any government grant that has been charged, put there the government grants. If there's any fair value, you put them on fair value gain or loss. Now account for the non-cash item, which is depreciation, amortization, impairment. When you have done that, then you do working capital changes. So I'll explain that to you in our next meeting. I'm sure in the next meeting, when I've explained that, you'll be fine. So it's been a good day. Let us revise our preparation of financial statements very well. I think on is it Friday and Saturday or when? Or Saturday and Sunday? When we have FR again?
Sunday.
The morning of Sunday.
Sunday.
The morning of Sunday, yes. So you have enough time. So you have enough time to study. You see, the problem with you students is that when they teach you, you pile the notes. If you pile the notes and you have not revised it, the next meeting you will struggle. So at least between now to Sunday, have time, revise your preparation of financial statement, where the P&L and statement of financial plan, master it, so you can try your hands on the November 2020. If you have any problem, you can get back. A lot of your colleagues have been getting back to this. One particular guy, this man, more times than you can ever even imagine. Please, wherever you are, like war paint.
Lenovo.
Before they even have a chance to roll. Be disciplined. Who is using the Lenovo? She's a healer. And she's one of the dangerous ones. Not even behind the computer. You see, she's got a big heart and a beautiful responsibility of students. She loves fears. So you do that.
Hello, boss. I'm Chappelle.
If there is any problem, get back to me. There is one guy, Bismarck. He will always call me, asking me, how did you treat it? I think when he watched the videos, he's able to see some things he doesn't understand. He calls me and I explain it to them that way. Let's do our best. So that between now and Sunday, you can master it. Then I know that at least your console is secured. Preparation of financial statement is secured. At least you understand it 70%. You can get something. Then I'll come and teach you the cash flows on Sunday. When we have done that, then our next week, we look at interpretation of financial statement. We'll tackle it very well. When we have done, we'll come back to standards. And I'm sure when we have done these things, you shouldn't face any problem in the March diet. So let us have a nice day at work. We'll meet again on Sunday. Until then, may the good Lord be with us all.
I'm missing Emil. Tuesday, we are missing Emil. Wednesday, Thursday.
You say what?
We are missing Emil.
Of course, MA is Tuesday. It's not Tuesday.
Yeah, Tuesday. Yeah.
Of course, I'll come for this. Is not MA class, so I'm not talking about MA.
Thank you.